All right, yo and hello. Hey, everyone. This is Niaz again. Just wanted to do a quick update about the market. I did a video about a week back, and since then there has been quite a bit of things that's been happening, and you know, the people that rule us unfortunately are not either stupid or evil or incompetent. I really mixture of all of that, more or less. Um, So basically, I wanted to kind of do an update because quite a few things has happened since then. Primarily speaking, as I had pointed out before that, if the market was breaking up above, what was that, like that 39, 90 or so, and yeah, roughly about that area that we were expecting if it goes up with good strength for it to kind of blow right through. And basically, yeah. Um, so basically, it really did that. So on, in fact, the 27th, on the day that the Fed jacked up the interest rates, let's go ahead and name it new three. All right, let's take all these old, yeah, all that old art out of the picture. So anyway, so basically, let's go ahead and kind of go over what's been happening. So essentially, as I said before, that if the market's going up with good strength, what was the possibility was essentially since the market broke up above 39, that was 39.38 or so. That was kind of like a good level that I was looking at. If it broke up above that with good strength, and it did. In fact, it not only touched 400, 4,000, it kept on moving on up. So basically, as I've kind of pointed out last time, that still in a bull market, chances are, I'm sorry, not a bull market. We're still in a bear market. However, right now, still in a kind of like a counter trend, summer rally, and this is exactly what I had predicted. No, I wouldn't say predicted, but speculated as the highest probability move going into summer. And in fact, it has kind of outpaced my own expectation as far as what kind of a move that we'll be getting. Usually, what happens is that in a counter trend move, it goes anywhere between 25% or so, anywhere between 20 to 50% from the top and the lows. So which would be from here to here. But generally speaking, they most trends don't actually take out the last pivot high, and so in this case, it's coming close to taking out the pivot high at 41.75 or so. So that is going to be a significant area if it does go through, because again, it's a bear market. If it does go through, that's a pretty good strong strength that is showing, at least technically speaking. Now, if it does go above that and about what was that 42.90 or so, that I kind of thought that that's a good area to also take a look at as the next level up. In fact, I think that's going to be in many ways more of a stronger level, um, because that essentially now we're setting up new highs, right? New highs, and we're if you break through that last high, right? I mean from 41.75 to 42.90. That's about 120 points or something like that away, 115 points. And if it breaks that, then we're again breaking through another high. And um, so essentially, technically speaking, these are ending up like looking like really kind of like important levels. You can see some, there's some important levels here, right? So it's a fairly important level. Um, so basically, what is the expectation, right? So in other words, that we're in a bear market. This is a regular bear market rally. At least that's my position, like analysis, right? And until it needs to prove itself to be like more than a just a rally. And obviously, a new market trend is will be based off of a rally, right? So we will know, and the market will tell us that this is the bear market is over. Now, as I've said before, why this doesn't look like a bear market low, at least this low. Um, and partially speaking, when market does this bad early on, generally speaking, we tend to see a rebound, and then market tests itself again. Generally speaking, the bear market probably going to be going down again, because again, we haven't had a washout day, washout week. We had a few days. Obviously, this was a bad day, but this kind of like came out of the blue from this high. Now, what is the expectation? Why did the market go up? And essentially what happened is that technically speaking, the market was predicting, not necessarily predicting, but giving us some signals that market thinks that it's going to be heading higher, because going into the Fed meeting, that the expectation was it's going to be 75 basis points, and so the market has priced that in. And so essentially, what the players are thinking is like, okay, we know the worst case, and then looking out in the future, they were pricing in 50 basis points, um, and so here, let's see, Fed Fund Tool. And so basically, what happened is the market did exactly as they were gonna do, right? Um, and so basically, right now, then um, we still have this bear market rally or counter trend rally, summer rally, right? And it's a summer relief rally. I mean, that's it's actually, I mean, it's very common, a common thing to see. You have traders at home, or vacation, and people who are trading are going to be more of, as I've shown before, like somewhat, basically, um, basically your common, retail trader. So So basically, what happened is that the market was pricing that in. Now, what was interesting when Powell said about the Fed rate is that he's going to be looking and more data dependent. And now the problem with that is, this is what he has been all this time anyway. That's kind of wishy-washy, right? All this time he's been really gung-ho about inflation. Now he did not back down from inflation, but what the market really keyed in on was those words that he's going to be data dependent, and he's going to look at it like like a meeting at a time. And so based off of that, the market just shot up, right? Um, and so you understand, like, I mean, the Fed's bias is still the same, but the market is really kind of honing on, like, really focusing on those two words that kind of contradicts what the Fed has been saying all this time. Because if it's based off data, data points, then there's a chance that he's not going to be as adamant about jacking interest rates. Um, Now, the problem with that is, that's what he's been doing all this time, and the market kind of took him for a ride, because he wasn't that. That's the whole point of him being not, or the Fed not being ahead of the curve, so to speak, right? And so we kind of back to square one. However, at the same time, I'm discounting that, because essentially he stated the same thing, like inflation is number one. As long as inflation is number one, and it's at whatever 9%. Um, he has, it's not going to be like an overnight fix, right? 75 basis points not going to fix anything overnight. So basically, in other words, what I'm saying is that I'm kind of estimating there that the market's kind of overpricing it. They're kind of like becoming over jubilant about this, which is again kind of what you want to see in a bear market, in this kind of relief rally, because people tend to start to buy in, because on hope, and yeah, hope. They're hoping that things just go to the moon, right? Or this is the end of it. Now, something also has been happening in international speaking the last few days, has been this whole thing with China, right? And Pelosi landing in Taiwan as a show of support for Taiwan. Um, And so, what is the effect of that? Is that right now it hasn't. The thing is that the market did go down yesterday, but it didn't. I don't think that technically speaking, it wasn't that bad, right? You can see that. Where did it go? There you go. Okay. Okay. So basically, the market, kind of went up in the middle of the day, came back down. Now, sure, the closing was kind of, not solid. But the thing is, I think if you look at the market right here, you're looking at about 41, 44 or so. That's basically the level here, like in the last few sessions, like that the market has been kind of hitting at or hitting close to. And like I said, that it hasn't really, even with the problems in international speaking, we have the thing with Kosovo, and I don't want to go in that can of worms. And then now they're trying to do this whole thing with Taiwan, and all that. Um, the thing is that if you look at the market, it hasn't really, they haven't really like, they just didn't like go and fall down, right? Um, so in other words, that goes to show that the market has digested it fairly well, I would say. Um, Now, yesterday the market did close with good, a bit of downside um, trend, but again, it wasn't like it was like on a train heading south or something like that. Now, why that is important is because the market is not really panicking, right, based off of that, and partially because this looks to be like a win for Pelosi or Team America, or the stock market essentially, because well, she landed. They said they were hoping the Chinese that at least that's what we've been told. The market's been told that they don't want us to land there, and Pelosi landed there. So voila, that calms things down. And just imagine that if that big news hasn't moved the market down, what happens when she comes back and everything's great and she meets like South Korea and Japan and I don't know, Australia, India, Mars, and everything's hunky dory and everything's good, right? So uh, I would think that there's possibility of it moving up. Also, some of the we're still in middle of the earnings reports, earnings season, and some of the earnings have been actually coming out okay. And so, in other words, the earnings hasn't been as bad, you know as um, at first it was kind of bad. So it didn't hold basically when it started. Um, Now, the problem with that, or not the problem, the speculation with that is that we have to wait for, whether they get revised down or up. And again, my assumption, my speculation was that, they're likely to revise them down. Um, and why is that? Basically, like I said, that we are now living under a more of a financially tightening situation. And so in this situation, it gets harder to do business, and so we should see basically lower margins, lower earnings on stocks, and so therefore, equity should take a tumble. And so as the revision starts coming in, that's one side of it, right? Then the effect of because understand that it's been only like a few months. What June is when this started to tighten, I believe, right? June 1st. Yeah, it's not July, it's June 1st. Um, and so basically, it hasn't been that long that we've been looking at like a higher interest, like basically a hawkish environment. And so basically, what that implies is that as more and more the environment stays like this, the more likely that the bear market is not over, right? Now the thing is, the market does again look technically pretty strong, and but this is again something to be expected. Okay, we have 41.75, then 42.90, and then we have 45.09, 46.41, and finally you have a little top over here, 47.45, but that's really not that important. I mean, it is important, but we got 48.18. So I mean, if it does go up all the way to 48, 47.45, we can definitely expect to go up to 48.18. So what does this mean? That means that right now in the market, again, like I said before in my previous video, that it's going to sideways motion. If it does really break 41.75, then 42.90, I mean, those are strong. Technically speaking, those strong signals, even though fundamentally speaking, the market is still the same environment as it were before. But again, expectation should be that it's gonna, kind of come down again. Now, if the market doesn't, the other option is the market can go sideways, right? Who cares about like going up or down? It can just get stuck in this like level here. In that case, are we in a bear market? Technically, yes, because it's like it's below the highs. Um, but if the bear market, I mean, technically, like we haven't made lows. I mean, you can still make lows, right? But to be honest, it's more of a sideways market, and it can keep on being like that, and that's going to be the most painful market to trade in unless you're an everyday trader, intraday trader, and I don't have that much time. I mean, I do have time, but I got a lot of things I gotta focus on, so I'm not trading intraday as much. It's gonna suck for me. But essentially, what the market's looking like is that um, if it does break through these levels onto the upside, at the minimum, there's now a break from our bear market, um, and we're in a sideways market essentially. And if it kind of moves up and down and stays here, if it keeps on moving on up and breaking levels, I mean, then it's a strong market, and we know what this is. If it starts to make new highs and new lows, higher highs and higher lows, that is to say, like, let's say, it goes up, then it has a low here, like boom, 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 low, higher than these lows, right? Keeps on moving up. That's a trend. I mean, now the trend is up. Um, and so in that case, you have to wait for the market to give you the signal that maybe the market's turning around. However, again, this is bear market. Looks like just like your regular bear, summertime rally, bear market, relief rally, that type of deal. Now again, it's been the rally has been going on for about a month and a half. So generally speaking, a rally can stay anywhere between a month to 3 months, right? So it's going to be major rally. Um, so anyway, so that's basically where we are at. I just want to kind of point out why I think the market's kind of a little bit more exuberant, because they're really pricing in based off of the words of Powell about you know it's like a he slipped a sentence, and then everyone's like honing on it. Now also, if you think about that sentence, it's kind of like contradictory, right? So on one hand, you know they have an agenda now, which is fighting inflation, but the other which is in other words, they're trying to like stay ahead of the curve, even though they're behind the curve, right? But on the other hand, they're going to be data driven. It's like, what the hell? I mean, it's that's like it's like sunny and we're in the desert, but also raining at the same time or something, right? So it doesn't make any sense. So yeah, so let's go ahead and take basically wait and see what the market's gonna do. The other reason is obviously I want to do that because of the whole China thing, and again, the market's been behaving pretty well. The reason also is because the market didn't really move out of this range, so this is kind of a continuation pattern type of market here, and so if we see the market kind of start to get congested, daily bars to be smaller and smaller, then we might expect the market to kind of move on up again, because again, it looks to be a fairly a strong upward move. Now, if it can't break this 41,775 level, hits it a couple of times or whatnot, and starts to move down, well, then we back down again. So maybe we go back to our um, bear direction again. Okay, so some of the other things that was kind of interesting was copper. As I said before in copper, that um, it was it touched down almost to 310, and not only did it go up. Let's see. Let's save this as. Okay. So not only did it not kind of hang around and try to touch it again, in other words, that would have been a kind of a bear market signal. It moved on up, right? And it moved on up all the way to like 359, I believe, 3.59. Um, and so it's now, at least like in the last few days, obviously it's headed down. It's not really that relative to copper's usual move. It hasn't been that volatile, at least the last few days or so. Now, um, it's kind of interesting because the market's going up, right? And the copper did go up, but at least from right. So, but if you look at copper, copper's been actually kind of trending down for some time. I mean, for the same time the market has been going up, which implies that they're probably projecting into China, and given that China is like a massive user of copper, they're looking at that, instability and possible volatility, and they're pricing that down. Um, Now, it's still in an overall downtrend, on the daily. I mean, you can clearly see, right? It's clearly downtrend. Okay. Um, so, well, also nice channel there. So, so basically, we were looking at 310 before, so chances are that it's kind of again interesting that the copper is kind of taking a breather while the market is going up. So in other words, copper, that could be a counter signal, right, or a divergent signal, and so that's something to look at. That may give us a sign that that the market's probably still a bear market essentially, because people in the metals market are not pricing any kind of upward or like uptick in economic activity, which is why copper is headed down, right? So again, not a good sign. Um, Bitcoin was also kind of interesting because Bitcoin is also something that's been kind of lagging because the market's going up pretty well, but Bitcoin the last few weeks you can see hasn't been really making much, which again is a divergence. Bitcoin is like I said, Nasdaq on crack, and if Bitcoin's not moving, right, Bitcoin should be higher beta. That means people are not really going into it, and the easy money is not going into it. So in other words, that again, there's not at least based on Bitcoin, some of these other signals, that doesn't seem to be that there's a consistent strength in the markets. So something to keep on looking at and think about. Oil has been 96 as we had looked before. Boom, right? It was 93 or so. It touched a couple of times. These are the levels: 87.48, 84.21. You can go feasibly go down to like 60, 70. It's still in a long-term bull market, right? Oil, I mean, it's all the fundamentals are so good with it. So But technically, those are some strong signals, and really after that it's going to be 62, and we should like expect oil to kind of hold the fort there. Um, but yeah, I think that oil right now it's kind of like getting congested, and it's probably going to sit around somewhere over here with so much uncertainty and economic like drawdown. It's likely that oil might be just going sideways for some time, kind of drifting down. However, again, it's in a long-term bull market because fundamentals. Everyone's having wars at some point, and at a given point, everyone's going to be going up back to like usual economic activity. You have higher inflation. You got wars happening. Fundamentals good. Um, you get supply chain problems, lower investment into infrastructure for like exploration and refining, and you have also broken supply chain because of the war. Because with the energy markets being what it is, the Europeans are not buying directly from Russia. It's like a kind of like a what you may call kind of like rearranging the deck on Titanic, right? Because it's like so Russia sells it to India or like Serbia, and then in turn around and sell it to Germany or France or whatnot, right? And then they charge them higher. So it's like they're getting the same oil, right? Or basically some musical chairs, and it's just they're like recycling through like less efficient like supply chains. So again, this is not that's a bullish sign. So basically for oil, um, I think I guess I'll just keep it at that. VIX is something also interesting because what was weird is that even though VIX has been like pricing in not a whole lot of volatility, as you can see on the 29th, the low was 21.21, and I said before that VIX we should see in this bear rally, go like 20 or so, maybe even lower. It's close enough, it's fine, it's not a big deal. But one of the funnier things is that the market has been pricing higher, right? In other words, they're expecting a higher future volatility, which is kind of different than what you have seen before. So vol traders are basically looking at this and basically thinking that something might be coming up, right? Um, and so yeah, and so let's see what happens with that. Um, let's see. Really, that's really it. I mean, it's just that I just wanted to kind of go over like why Fed Powell's, I mean, the up move on the equities market based off of based off of Powell's like sentence, in my estimation, is probably overdone. The people are again pricing too much hope into it, and so given that bear market rallies are what they are, there might be some risk that people are pricing too much into it, and this is going to be, that they're going to be sorry for that. And the other portion of it is that, with this whole China thing, again, I don't think that this is a nothing. I think this is a nothing burger, essentially. It makes no sense for the Chinese to attack anyone. They are winning by not attacking, basically. In fact, their policy has been since the 2000s just to like step back and get the benefit of Chimerica and basically like wait for America because it's already doing a great job at imploding itself. And so again, it's like, why would they attack Taiwan? It makes no sense. They just waited out. They're like, every year they're getting, relatively speaking, getting more powerful. The balance of power is switching to their side. Time is on their side, right? So it makes no sense. So I think what's going to happen is pretty soon people will figure that out, and after there might be a little bit of jubilation, with the media and everything saying all this stuff about how the Chinese lost and stuff like that. It's like, what are they gonna do? Like, attack um, Pelosi's plane? I mean, what were they gonna do? The other thing is that she landed right, and there was it was a snap decision at the last second. I mean, they planned it. Obviously, they didn't tell anyone, so it's like giving the Chinese as least time as possible to respond. And so, that's a weak move. I mean, people haven't commented on that, but that's a weak move. That's weak sauce. So, anyway, I don't want to keep on going over and over again about the same things. I actually wanted to kind of go show some new things, but I don't know. I'm just gonna let that slide. Make some videos later on. Going over anything else I want to, and maybe some more detail. Let's look at the other markets. Foreign markets are doing okay. Again, like I said, probably because again this looks to be a win, quote unquote, because the media is obviously spinning that as a win. I don't know win about what or who, but it is what it is. Um, so foreign indexes are doing pretty good. Look at dollar's kind of retreating, but it's still high. So yeah, you have like a really important level here that it broke through. Well, not really that important, but definitely a trend line over here that it broke through. Now the big trend line that we're looking at is this one. Let's go ahead and again, I'm not a technical analysis Nazi. I just want to look at basically the general strength of a chart, general levels on a chart, general price action, price behavior on a chart. And I base first I understand like what is the fundamental basis of a market, what's the overall condition environment it's operating in, and then look at the way charts behaving, and look then if I want to make a trade, look at like triggers. So anyway, so basically, there's a major trend line. Now, one of the things people do is on this kind of stuff is they like do trend lines and stuff like that. Now, dollar index is an index, and it's not like there's like volume to it. So it's not like exactly the same thing as like a dollar future. But since that's on ICE, it's a um, exchange. It's a different exchange. I just use dollar index. I don't trade dollar itself. It's an indicator. But anyway, so my point being that we could expect it for it to come down and hit this major level here, this support line, and you can see that it's still headed down. And okay, so there's like a little pennant pattern over here. You also have like a little bit of a flag pattern, which is on an up moving market that it's not a exactly pretty pattern, right? Flag pattern, but it works. But in an upward moving market, those are kind of like continuation patterns, and so they could come down over here and kind of break up again, or just break up through over here again with higher amount of volatility, and especially dollar is now the volatility indicator. And people are just hiding into dollars. Um, so, yeah, I'll leave it at that. Basically, we have to wait for the earnings season to go through and see what happens. NFIB numbers coming up today. Economic optimism coming data is coming out today. IBD. So those are some of the key things to look at. Tomorrow's obviously oh, big thing. Inflation rate, inflation information data is coming up. PPI is coming out. Jobless. So basically, those are the three things you have to look at. Inflation rate, consumer sentiment, and unemployment. So that and the Fed, that will drive the Fed's decision. And yeah, basically, And basically, yeah, so basically that it's important to take a look at it and see what that what's telling that's telling us about the market. Um, yeah, it's 8:07 and where I'm at, and the market's going to be opening pretty soon. So I'm just going to close it down. I got some, time to sit down and do one of these videos. Um, so yeah, I'll see you guys later. Keep an eye out on those data. If those the problem with this is negative data is positive data, right now. So if they come out negative, because now the Fed fund rate futures market is now pricing in, also like 25 basis points. With this much inflation, they're you know like 25 basis points, right? So it's not that much. There's a fairly good percentage chance that at this they're pricing 25 basis point, which I think is just it's delusional. Um, but the point being that the Fed might do that or might not. If there's uh, you know worsening data on like the job market and inflation kind of you know starts to go down, basically, who knows? Then they might start to like jack up the interest rates. It's not likely. I'm speculating. It's a low probability situation. We're still in a tightening cycle, and yeah, I think a lot of this is just like hope kind of getting priced in right now. Um, yeah, yeah. So just leave that be now. Um, So bad numbers might be good, and if there's good numbers, that means the Fed might just keep on jacking up interest rates, especially inflation keeps on going higher because they have more room to run. So I mean, either way, you have a situation where uh, they're both. If bad news is good news, both of them might make the market go up. But again, that's to be expected. Our overall condition, though, still the same. We could still see, again, shorts kind of give up. Shorts kind of gave up like last time I made the video. The shorts basically kind of gave up beforehand. I haven't checked the short numbers, but I wouldn't be surprised for them to be kind of, let's see, kind of waiting for any kind of break like this. So if the again if the break like 41.75 or so, 42.90, we should for at least 45.75, 41.75, we should expect again another bump up because of short coverings. CTAs were closing down before like the Fed uh, decision on last Wednesday. So again, that kind of a thing might happen again if it breaks 41.75, which will give it a bump. But though that's again not like those are not like buy side momentum. That's not like buy side demand, right? So so yeah, I'll leave that as is. I hope to do one of these videos again. Bias kind of stays kind of the same. As far as my trade, I closed my trade at about 320 or so on um, my last major trade, not day trade. Just like position, not like the swing type trades that I've been making. So that was off at about like what was that 320, like 325 or so. Um, so I mean it was a good trade. I mean it was not as obvious. I mean it's a great trade. But because but I was expecting to like go to 310. It went to like 313 and really moved up back again with really good strength and you can see it kind of panned out. It was a good thing I closed out. Um, I gotta check like what was my average price. But anyway, so yeah, I'll leave it at that. Um, yeah, so that's it. That's it, guys. Talk to you guys later. I'll, you know, uh, have fun with your trading. And yeah, this whole China thing is a nothing burger. This is gonna kind of just go away. and Pelosi will probably come back, and people will just say "Hurrah!" and then nothing's gonna happen basically, except the Chinese will retaliate, not the way that the media is telling everyone. Like again, like this blew up in their face. Like based on what? Like what were they gonna do? Now they have basically the justification to do whatever. Sorry for that. That was my phone. Anyway, yeah, that's a good timing, I guess. I'll just leave that up for now. Hope to guys hope to do this one of this again. Have a great day and have a great week, and well, happy trading.